Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go over some Twitter information. Got a bunch of new stuff that I'm going to talk about. And let me know in the comment section below what you guys want me to talk about. I'm running out of ideas because I've got a lot of this stuff. Is if you're a long-term investor, you kind of just sit through it. I know a lot of people get scared. They're talking about short-term pullbacks, trading. I just don't do any of that. And a lot of the times, to be a successful long-term investor, you just tune it all out. What I started doing is basically just listening to myself, looking at data, and I don't even really listen to people on YouTube try to give their opinions. And all it is just an opinion. Doesn't mean it's right, wrong, or indifferent. I've got my strategies. I'm riding through the bull market. If we get a recession here in the short term, so be it. I'm going to ride through it. I don't think none of the problems have been solved in energy, and I think that's the root of all these problems. Is the energy being short? But I'll go through here. We'll go over some stuff. I'll give you my financial opinion on what other people think here. So if you want to add me again, it's at Finding Finance. There it is there if you want to add me. So this is Cuppy. I like what he said here. He goes, bro, read the comments to all my bullish threads starting in late June. Guys, thought I was delusional. Gave me the confidence to max it out. Seriously, read the comments. I ended June at 145% net long. When the mob agrees, watch out. When they laugh at you, max it out. So basically, he's just saying be a contrarian against the mob. The mob is the retail sector. When everybody thinks, the stock market's going to crash, we're going to have a recession. If that's what the mob thinks, we should go, he says, max it out and laugh at him, right? And everyone thinks the housing market's going to crash. I know that. I'm not saying that it can't crash, and I'm still looking for more data. I'm looking for more inventory to get to crash levels. I just don't think we're there yet. But I wouldn't necessarily max it out, but I wouldn't necessarily short it either. I'm kind of indifferent on the inventory. I do think that there's shortages out there in the housing market. I do think that the interest rates are having an impact, and we have to see how big and large that impact has on inventory. Here's one. Argentina is collapsing again. People are refusing to work as the government runs out of money and cuts subsidy programs for food and fuel. 43% unemployment, inflation over 60%. Half of our country doesn't want a job, and the ones that do don't want to pay the taxes for the others. And one thing that I think is important in this post that maybe people aren't realizing is they've got massive unemployment. They have a recession if you've got that much unemployment, but their inflation continues to go up. That is a driver of some of this. And I know that their currency system is delinked from, the dollar. They're not pricing commodities in their currencies necessarily, but it's something to notice. Coming down, it says strong U.S. gasoline demand this past week, up 2%. Bullish oil. So gasoline demand continues to increase over these weeks, and it's been pretty high. So if this recession that we're in, it's not impacting gasoline demand, at least not yet, or maybe it is having an impact, and demand would be even higher than this. It's a possibility, but demand is still going up, and gasoline has a strong demand. We've got Grady here. It said, even before I called commodities bear market low back in April 2020, that platinum will outperform precious metals in this bull market. I called the blue breakout. Now we've had a third blue back test. So a 3-drop rule is now fulfilled. I don't know what a 3-drop rule necessarily is. But here's platinum. We got the long-term downtrend line. We broke out of it. You get the retest. And then it retested the retest. And now it's retesting the retest. We've been retesting platinum for a pretty long time. I've been a buyer ever since 2019, and I've been cost averaging in anything below I'd say anything below where I could get the metal for below 1,000. So that's where I was picking it up. So 900, 800, 950, wherever I could get it, I bought it in that general vicinity since 2019 going forward. And hopefully we get a nice big run out of this. It does look good, and we're doing the retest of a retest of a retest of a retest, or something like that. A triple retest. Here's one, August Newcastle coal breaking out above $400. Appalachian and ILB going parabolic. High thermal prices to reverse met declines soon. So we've got this basically a pattern that's come up with higher lows, and then we came up to a resistance level. Now we're starting to break that resistance level to the upside for coal. That's Newcastle coal. Looking over here, this is also Central Appalachia, Northern Appalachia, Illinois Basin. These are looking like they're going vertical too. So coal prices are going vertical. Ridiculous, guys. But you know what? The recession, it's going to completely destroy this demand, right? It's going to completely turn this around. I'm joking when I'm saying that. It's not impacting energy. This to me looks like an energy crisis full blown. That's what it looks like to me. Coming down, I thought this was funny. So she goes, so for the die-hard uranium bulls, based on your investment, what multiple would you need for life-changing gains? And Uranium Corgi says 500x uranium for wife-changing gains. I just thought that was funny, guys, for, not life-changing, but wife-changing. Here's gold. Perfect back test. This is from Silver Chartist. Looks like we've got nice, good support going across here. I drew the same line on a lot of precious metals mining companies' charts. But we are getting a bounce, and we just got to break this downtrend, and we'll see where we go from there. Very oversold levels since 2018. I like these tweets here. It says, everyone's trying to put on the same 2008 commodity trade. Short commodities as we are in a recession. They are objectively ignoring current fundamentals. The current environment in commodities is not even close to 2008. I completely agree with that. Anyone who's comparing to 2008 has no idea what the market conditions are in 2008 versus today. We had the housing market peak in 2006. 2 years later is when that crash came with a boatload of inventory in the housing market. We had all of these commodities do like super spikes in 07 and 08. They all took off and did these super spikes. We haven't done that in anything. I feel like we're more like 2001 or 2 or something like that. That's kind of where I think we're at. But I agree with her. I like Kevin here. It says the crypto ecosystem is one giant energy wasting parasite on the real economy. At some point, the world will not want to feed that beast, and it will quickly complete its wipeout. I hope that happens. It is a complete giant waste of energy. It is. And at some point, when energy is completely scarce, we'll see what the costs are to transact in it. This one's CTRM setting up heavily to outperform the Baltic Dry Index. Here's CTM versus the Baltic Dry Index, ready to go towards the top of the channel. If we were to look at it from a dollar perspective, this is priced in dollars. It's an inverted head shoulder developing where we could potentially break up and move to a much higher level than where we are at today. This is a NASDAQ chart this is Tesla. He puts in there the most ungodly large pattern of distribution the world has ever seen. So people are selling this as this cannot raise up above this distribution area. Distribution means that people are selling shares and that this will most likely head lower. This is another validation of our market conditions. Market conditions are showing us that the NASDAQ stocks are selling off. That is what we're seeing in a lot of the NASDAQ. They could go up one last push. It's called the bull trap, where they trap all the bulls and then it sells off later. I still think that we're really early to this mix. I think we're like 2001. based off of where we are inventory-wise in the real estate market, where the NASDAQ stocks are at, how interest rates are behaving. But it's like 01, 02, and maybe this is a compressed cycle. We'll find out here shortly. But there's that. This one I really like, guys. I like this quote here. It says, "They did nothing for it. All wealth in the entire world is due to the work of the oil sector. Everything else, apart from maybe some subsistence farmers and hunter and gatherers, is just a derivative of oil. Even other energy sources would not be possible at any scale without oil." So what this person is basically saying is that the roots of all success of humankind are rooted in us extracting oil, and that everything beyond oil is just a derivative of the energy that was created from oil. Pretty profound. And I think it's probably true. I really like that quote. We've got the COMEX registered silver continues bleeding as 270,000 ounces transferred to eligible and 998,000 ounces in total are removed from the exchange. Open interest now equals to 213% of all vaulted silver and 1,295% of registered silver. And this is the declines that we're seeing in these totals here. Northstar's got a really good chart here. It's the M2 money supply versus gold on a log scale. And what he's thinking is a huge gold bull and a breakdown to the downside, which means that gold is going to outperform or account for the M2 money supply. We saw that in the early 2000s, 2001. This is why I think that we're in the 2001 timeframe. We've got the Dow Jones, S&P 500, the NASDAQ is all starting to roll over. We're starting to get this to basically come and roll over and move lower with gold accounting for the money supply. Right now, we're basically doing a retest. We've broken out of this triangle pattern. We've come back up and doing a retest of this top here. If this heads lower, it's gonna be similar to 2001. And I agree with the chart. It looks like a nice chart there. Yeah, and I'm back to where that is in terms of my commodities. Look insanely good. So that's what I've got for today, guys. I just wanted to share some information that I'm reading on Twitter. Hopefully you guys get some value out of this. If you guys like the content, give me a thumbs up. Subscribe to the channel. Subscribe to the website below. If you want to become a platinum member, you can follow me and what my opinions are. You can see my portfolio. You can see all those things on the platinum membership. All right, guys, that's all I've got for today. We'll catch you next time. This is Finding Value.